Hey guys, today we're going to be analyzing kind of the scenario or Twitter's IPO and answering a couple questions based on this. So our first question is that stock was issued or shares of stock were issued when Twitter IPO'd. Were these shares sold in a primary market or a secondary market? So to start things off simply, let's define our terms here. So a primary market is a market where companies raise capital by securities. And a secondary market is a market or e-market investors buy securities that they already own. Just to note here, this is what most refer to as the stock market, even though note that stocks are also sold in the primary market when they're first issued. And therefore, if you look at these definitions, we see that a primary market is a market where companies raise capital by issuing new securities. Basically, an IPO is therefore an example of a primary market transaction, since this is when this new security issue time. So therefore, Twitter IPO or shares were sold in a primary market during its IPO or during or after. Awesome. Let's move on to question. Second question today is Twitter's IPO an example, not an example of direct finance or direct finance. So that's for another question. Sorry about that. So direct finance is essentially so direct finance basically relates to raising funds by borrowers or firms directly from the savers through financial markets. So let's make that simpler here. So to make things even simpler, let me rephrase. So examples of direct financing would include borrowing money from friends, borrowing money directly from investors, and selling stocks or bonds. And in this financing method, a company or entity doesn't really pay an interest rate. Now let's go ahead and define indirect finance. So we have indirect finance is basically, it relates to the raising of funds by borrowers or firms indirectly from the savers through financial intermediaries. So it relates to raising of funds by firms, borrowers, indirectly, obviously, from savers through financial intermediaries such as banks who hold the money, obviously. So now this question's a little more layered, but if we look at something like Twitter's IPO, it's not as simple as borrowing money directly from a friend or from investors, but rather you would really need the involvement of an intermediary such as an investment bank. So we can answer the question by saying that basically Twitter's IPO would be an example of indirect finance.